Good afternoon. Today is, or good evening. Today is Monday, the 31st day of January, 2016. Time now is 6:05 p.m. Eastern, and here in Phoenix, Arizona, 4:05 p.m. Eastern. Globex has just opened. We're doing a little Q&A session in preparation for the new week, which will be starting 6 minutes ago. Tonight, Globex begins the Monday session. Just as 6 p.m. Monday night, that begins the Tuesday session. A lot of times we have people crossing over from equities to futures because, well, it's a much better deal. And that's confusing because for them, trading has always been sort of a 9 to 4 kind of a job. Intraday trading, day trading, if they're a buy and hold, then the clock doesn't matter. You're looking at the calendar. But with futures, we run what are called Globex charts. And my charts run 24/7. I try to give the computer a little breather on Saturday, but then Sunday I have to crank it up to go to work and put together the weekly trading zones and to start the concierge trade alerts and all of that. Okay, let's take a look and see how we open the market tonight. And we're going to do this a little different than we did the last time. And you said, yeah, you always say that. Okay, well then it just wouldn't be right if I didn't say that, would it? All right, gold gapped significantly lower on the open. Friday, we closed the week on gold at 11.18. Tonight we opened at 11.1670, and we're trading at the low 11.1530. Okay, that's gold. Let's jump over to the S&P 500. These are 30-minute candles. Typically, if you tune into the radio show, or if I'm showing my charts during the live trading room, or if we're in a mentoring session, I will usually have hourly charts displayed. These are 30-minute, and the purpose of the 30-minute is so that you can easily spot where the one trade a day alerts go out, because those go out at 11:30 a.m. Eastern. So we close the S&P Friday, January the 29th closed it on the high of the hour, but not quite the high of the day. We closed at 1931.25. We gapped lower on the open tonight, down to 1929.75. We've put in a high of 1932.50 so far. And let's see what kind of volume we've traded so far. Volume. So far, we've got 6,700 contracts. Now, of course, there's always pent-up demand over the weekend. There's a new rumor afoot, new to me, maybe not so new to you, but the word is that Saudi Arabia has been quietly buying beaten and battered crude oil stocks. Yes. And here's the master plan. This is worthy of a Bond film. I mean, it really is. So they're going to buy up the cheap oil stocks, and the cheap oil stocks are cheap. Why? Well, because OPEC has overproduced. When the world said, stop, we have no more room to put all this oil. There's cargo ships filling the bays, the harbors, the ocean. It's like bumper cars. Well, they said, no, we shall pump, and pump they have. They said they were doing it to break ISIS's back, and so they may be killing two birds with one stone. That's possible. So down go the price of the oil stocks. In swoops Saudi Arabia, and maybe they're not alone. Maybe they have some cohorts in this endeavor. Now that they own a nice chunk of cheap oil stocks, they turn off the spigot on crude, and voila. Up go the price of the oil stocks because up goes the price of crude. Now, one would say, boy, they really have us over a barrel, don't they? No, they don't. Because we're not as dependent upon oil as we once were, thanks to the Chevy Volt. Just kidding. We're not as dependent on oil as we once were. We also, they've freed up our own oil. We can export oil. And there's just so much inventory out there. It will take a while to eat through that. So 6 months from now, if there's a much different picture on oil, you can say, hey, I heard it first on CFRN. I want to do something tonight. I usually say I'm not going to do it, but then I do it. And so tonight, I really don't want to do it because I want to get done with work. I have some other things I'd like to do besides work. I want to answer your questions about, well, I'll answer your questions about anything. Specifically, I want to answer your questions about the concierge trade alerts and the 1 trade a day trades. We have done just extremely well this first month of the year. We've done well with the alerts, which were once the tweets, for years, but it's really started to ramp up here over the past few months. And I want to make sure that everyone who's trading them understands how to best take advantage of them. And those who are not trading them, I want you to understand how it works. Now, Michael's on a plane headed somewhere, so I'm the only one here tonight. I am the only one who can see what you type into the chat box. Therefore, don't hesitate. Nobody's going to judge you for whatever question you ask. There's no silly questions, none of that nonsense. We just want to get through this, and then we'll get on with our Sunday evenings. If you're here for a reason. Well, it could be you're bored. You just didn't have anything better to do, and that's okay. Nothing wrong with that. Maybe you're new to the market, so you try to plug into every market-oriented thing that you can, and that's okay too, but be careful that you don't suffer from info overload. And also, many methodologies and strategies conflict. Doesn't make one right and the other wrong. It just means that they're two entirely different approaches to the market. And so if you, being new, or trying to figure out who you are and where you belong in this great big world of trading, too much information can really cause, what do they call it, analysis paralysis. I mean, you just got so much going on between your ears. You don't know if you should be long or short, at what price. I mean, what's a tick? How many points are in a tick? How many ticks are in a point? These are the kinds of questions that I'll answer if you ask. I'm going to go straight to the chat box. Rather than start talking and showing and pointing and crowing, I'm just going to look at the chat box. And when you guys stop putting stuff in the chat box, we'll probably wrap it up, you know. Is there any course, service, etc. that you offer that teaches how you calculate your weekly trading zones for the whole week? Thanks. You call them support and resistance levels. They're actually not, sometimes they appear to be just support and resistance levels, but there's a mathematical formula that goes with them. It's something I've developed over the last, let's see, it was December 14th of 2009. That was the first time we publicly published the zones. Michael and I have been we're trading them for a while, you know, to make sure they were worth releasing to the public. And so we did. And so December to 2009 to December, I guess a little over 6 years we've been publishing them. No, I don't teach a course on that. That's the one thing I don't teach. That, as I typed into the chat box to the gentleman that asked the question, that's my exit strategy, my golden parachute, and it really is. That's probably my final act as I exit stage right. I'll hold a great big seminar somewhere in a place that seats 10,000, and I'll teach the art of the weekly trading zones, which can be applied to any market, to any stock, you name it, and you can zone it. So thanks for asking, and of course, when that day comes, and it won't be any day soon, we have much to do between now and then, but there'll be plenty of advance notice so you can get a ticket. I live on the West Coast and start work before the 8:30 or before the 6:30 opening bell. Is there a time when I can trade using your charts and signals? Well, Mark, you can trade around the clock with futures. So, in other words, you can get up early, stay up late. Now, you're on the West Coast. West Coast guys have a unique, and ladies have a unique advantage because you can stay up late till midnight, which is 3 a.m. Eastern, and that is the London Open. And I got to tell you, there's some really good trading off the London Open. I'll show you a couple charts here in a second, and you'll see what I mean. The London Open has some good energy, but unlike the Wall Street Open, it's not chaotic. If we open in London and break to the upside, we tend to run to the upside. Whereas on Wall Street, you know, it's flip-flop back and forth for 5, 10, 15 minutes. Now, some people love that chaotic Wall Street Open. Some call it amateur hour. You know, others say that's the only time of day it's worth trading. Be careful of allowing people to fill your head with these bumper sticker type phrases. Find out a time that works good for you. So that's something you could do. Now, here's the issue. We train every morning from 9:30 a.m. to 11:30 a.m. Eastern. In the live trading room, we trade real money in real time in front of real people. We have over 1,000 hours of live training and live trading videos in our members area. So you can watch those videos. You can spend time with us in private mentoring sessions. But so yes, you can become a partner. Yes, I can help you learn how to trade. But I'm just going to be honest, it's not quite the same if you can't actually be there during the live trading room. I'll work with you. I'll spend time. I mean, if it's something you truly want to pursue, then you can trade. What hours do you work? On the West Coast. What time, Mark, what hours do you work? You work 6 to 4:30. Okay, so staying up till midnight, that's a bit rough. Although you should be able to get your goal for the day in an hour or two. Most days we'll pick it up in the first 30 minutes in the live trading room. So that still only leaves you, you know, with about without much sleep. So, you actually have to be at work at 6 on the West Coast. Well, if you got up at 3, on the West Coast. That would be 6 on the East Coast. You could trade pre-market. So, yeah, certainly it can be done. You can trade when you get off work. You can trade the Asian session. You can trade the evening session. But the block of, I mean, we have partners around the globe. So we have people trading all hours of the day. Now, what you can do, Mark, is you can take a chart such as this, and you can have a look, okay, and it will show you. You can put it on any market, whether it's crude or bonds or the dollar, the Russell. See, the Russell's a great trading vehicle during regular trading hours, but it's a little more difficult to trade in the middle of the night. The ones you can trade around the clock are the S&P, crude oil, gold, and the euro. All 4 of those make for good trading pretty much around the clock. Nothing changes. You don't have to use a different strategy or different indicator or different methodology. It just often will take longer for the trade to complete than it does during regular trading hours because you don't have as much participation. You don't have as much volume. Now, a lot of people come into the markets or come into futures wanting to trade the E-mini. In other words, the S&P. There's actually 4 E-minis. There's the S&P, the Dow, the Russell, the NASDAQ. The margins are $500 per contract. Makes it quite attractive. You can buy one contract in the S&P 500 for $500. You control $95,000 in equity. Now, if you hold that position into the next day, in other words, when the market closes in the afternoon and then reopens an hour later at 6 p.m. Eastern, if you've held that contract open, it goes to the full margin, which is $5,000. So you want to be flat at the end of the day. Now, at 6 p.m. Eastern, when the markets reopen, day sessions, or day margins, I should say, come back into play. So even though it's dark outside and it's 9 p.m. Eastern or 9 p.m. Pacific, it's dark outside, you still get day margins. I don't know why. It's almost as if that's kept a secret, but almost every broker that I know of honors that. When you can control $95,000 best of breed equity for $500, if you go into your stockbroker and say, hey, I got $500, what can I get? If you have a good relationship, I don't know, maybe you get a dozen shares of Apple. It's a whole nother world with futures. I won't go into all the reasons. Apparently, if you're here in this futures Q&A session, you already understand many of the reasons, or at least some of the reasons, why futures are more attractive, at least for me, than equities. And I traded equities for quite some time before moving into the 100% electronic market with no market makers, no middleman, no front running, no pump and dump, none of the silliness that costs real people real money. Jorge says, please explain the program. Tell me which program you're referring to. Are you referring to the 90-day mentoring program? Hey, you're welcome, Mark. And you know what? You can shoot me an email, support@cfrn.net, and include your phone number if you want. And I'll try to get together with you, and we'll talk about, if you want to get into the mentoring program, we'll talk about the reality of when you would do your training, when you would do your trading, and we'll see if it can be, you know, a reality for you. Okay, back to you, Jorge. You said, please explain the program. Tell me, oh, there you go. Both, but the alerts also. Okay. We have a 90-day mentoring program. Here's how that works. You come in every day from 9:30 a.m. to 11:30 a.m. Eastern. You watch us trade real money in real time in front of real people, while you ask questions, okay? Now, when you enter the mentoring program, you get our indicator set for NinjaTrader or for the DT Pro platform or any brokerage firm that clears through Gain Capital. They will have a white label platform that you can use. Our indicator set will work on that platform. Okay. Now you come in, you watch us trade 9:30 to 11:30. You ask questions, and then you go practice for 2 hours after the live trading room. As you're doing that, your first couple weeks, you're also doing two important things. You're writing your business plan, you're writing your trading plan. Those sound like two different things, or they sound like the same thing, but they're two very different things. The business plan is how you operate your business. Let's say you bought a Subway franchise. Okay, the business plan would teach you how to run the business. They would have a set of manuals. You know, this is when you make your bank drop, and this is how much cash you need in the till every morning when you open up, and this is how you order your supplies and where you order them from. Okay, that's your business plan, and how to determine if you're on track to be profitable for the year, all that stuff. Your trading plan, well, the manual for the Subway franchise guy would be how you actually pull off running the business day to day. Like, how do you make a sandwich? The 12-inch tuna has 3 scoops, 3 level scoops of tuna, not 4. If you get a guy in there putting 3 scoops on, it's going to throw your profit and loss all out of whack, okay? And then he gets promoted to assistant manager, and before you know it, everybody's putting 4 scoops of tuna on the 12-inch tuna. And you can't figure out where in the heck your profits are going. Now, I'm just using one silly example of the tuna sandwich, but there's running the business, managing the business, and then there's the grunt work, getting in there, actually putting on. The making of the sandwiches would be us putting on and taking off trades to reach our daily goal. Now, while you're practicing trading, you're writing your business plan, you're writing your trading plan. Once you have the method down, and it's a very simple little method, it's got 5 ingredients. We use 2 trade setups to trade every market. S&P, Russell, gold, crude, you name it, same trade setup. There's one variation of the trade setup. We have the basic slingshot trade, that's what we call it, and then there's a variation of the slingshot where there's so much momentum in the market that price isn't able to pull all the way back and actually touch one of our indicators. Okay, now, once you learn the trade setup, once you can actually put on and take off trades, you're going to study the 2420 blueprint. Now, that's designed to take you from 1 to 20 contracts over a period of 24 months. Before you go live, though, and blow up your account and lose all your money, what we want you to do is we want you to put together 10 consecutive days where you make $100 a day in 10 trades or less. I'll say it again. You make $100 a day in 10 trades or less, 10 days in a row. It's impossible to do that by luck. Anybody can get lucky in the markets, have a lucky day, have a couple lucky days, have a lucky streak, but you won't have a lucky week, okay, you certainly won't have 2 lucky weeks. It's just not possible. So by the time you put together these 10 consecutive days, you finished your business plan, you finished your trading plan, you thoroughly understand the 24/20 blueprint and the concept that it's built upon, now you're ready to go live with one contract. We are ultra conservative. Okay, I know most people want to dive right in there, make a lot of money real fast. I was no different. In 2005, when I left equities and came to futures, I was like a kid in a candy store, and I just couldn't click the mouse fast enough. I mean, I had a couple computers. I had more than one mouse. There's a little K switch. Some of you know what that is. Yeah, it was that bad, okay? And it's a bad idea. So you go live with one contract. Now, you have to increase your account balance by $2,000 before you can add your second contract. Now, this proves two things. One, that you actually understand the methodology and the mechanics. You proved that by putting together those 10 consecutive days in SIM. When you go live with the one contract and increase your account balance by $2,000, that proves that you've managed to take the emotions out of your trading. As long as your emotions are running amok, you can never be successful long term in the market. Most people want to be right. Most people fear losing money. Most people would be embarrassed if somehow this trading business didn't work out because they've already told somebody how great they're going to do, because they've really investigated it and they're very smart and clever, and they've built a great business, built a great company. Yeah. Okay, that was me. I did all of those things. We know better now. So you don't have to go through the same pain that we went through. I went through it, and Michael went through it. 90% of all traders, actually, I'll go 100% of all traders who attempt to become traders who trade for a living, we know that the statistic says 90% fail. The 10% that succeed are the ones who get a grip on themselves and do the things that I'm talking about right now. You go slow, you trade small, you put a solid foundation underneath your business, and then you build it one brick at a time. Now, once you've increased your account balance by $2,000, you're going to add a second contract. Doesn't matter if you're trading the S&P or the Dow or the Russell or crude. What I don't want you focusing on is more than 2 markets at one time. You're not ready for that yet. When you come into the live trading room, you'll see that Michael has 5-6 charts up. Mike's been trading a long time. We want to show you as many times a day as possible how this little trade setup works. So that's the only reason we have all those charts, okay? You'll focus on 2 charts. Once your account balance has increased by $2,000, you'll add your second contract. Now you're making $200 a day, okay? At $200 a day, that's $1,000 a week. It's 50 grand a year. You're not getting rich, but you're earning an average wage in America, okay? Now, we have some traders in parts of the world where that's a substantial sum of money. This is where you get started. It takes money to go to the second contract. You increase your account balance by $2 grand. But to go to your third contract takes a period of time, okay? We go from a dollar-based system to a calendar-based system because you're going to generate more money than it takes to add your next contract. So by your third contract, you're starting to pay yourself each week. You never want to have more money in your account than is necessary to trade the number of contracts that you're at right now. What I mean by that is if you're trading the S&P 500 and you've worked your way up to 5 contracts, okay? Now at $500 margin per contract, you need to have $2,500 in your account. 5 times 500, 2,500. But there's going to be drawdowns. There's going to be stop outs. So I want you to have at least $5,000 in the account. Once you work your way up to 10 contracts, we're going to dial it back a little bit, okay? To trade 10 S&P contracts, you'll need to have $5,000 margin in your account. I want you to have 1.5 times that amount in your account. Why? Because if you have excess funds in the account and there's a flash crash and your stop gets jumped, your hard stop, you could lose whatever's in that account. So this is why at contract number 3, we're going to start paying ourselves. It doesn't even matter if it's $100 a week. The point is, for many of us, now if you're brand new to trading, you don't have this issue, and hopefully you never will. But those who've tried trading once or twice, you know what it's like to send money to the broker. In fact, that's all you've ever done is send money to the broker. The broker has never sent money to you. Why is that? Well, we all know why. Because of the things we do when we're trading that lead us to being unprofitable. When you have the broker either wire you or do an automatic deposit or just old-fashioned mail you a check, it starts to do something to your brain. It literally rewires your brain. I'm really speaking to those out there who have a limp, the battered traders in the audience. You finally start to see that this can be a business, a real business that pays you money, that generates a profit, just like any other business. You have to learn how to think in probabilities. We're going to help you with that. You have to become extremely disciplined in your behavior and your actions. We're going to help you with that. Once you go to your third contract, start getting paid. Okay? After a certain number of weeks, we'll go to the 4th, and then we'll go to the 5th. At any point in time that you want to hit the pause button, you can. There's no pressure just because you're working the 24/20 blueprint. It's a concept, okay? It's a guideline. It's a blueprint, all right? At any time along the way, let's say 5, you get to 5 contracts. That's $500 a day. That's $2,500 a week before commissions. That could be a comfortable living for you. You might want to go on cruise control at that altitude for a period of time. No one's ever going to pressure you to trade larger. If anything, we're always going to be reining you in. But the blueprint shows you how to move from 4 to 5 to 6. You may hit a monetary ceiling at some point where you're doing great with 6 contracts, but every time you try to add the 7th, something happens between your ears and you just drop the ball. And so you go back to 6 and you do fine. you put on that seventh, it could be tied to some deep psychological thing about, you know, how much your dad made growing up, and he worked on his feet or in a sweatshop or in the fields or whatever, and so you're not worthy of that much money. Subconsciously, you have told yourself you're only worth so much, whatever that might be. And so you self-sabotage your own efforts at some point. Well, when that happens, it's no problem. We're not going to bleed out on the trading floor. We're going to back up one contract, or if it's really serious, we'll go into SIM if need be. When you go live, going back to SIM for a couple days to regain your confidence, to troubleshoot whatever problem you might be having, that's not a walk of shame. Okay, that's a wise business decision. We applaud that. We respect that. Those who ultimately succeed as a trader will do that more than once. You'll step back into the safety of the simulator because you've gotten rattled. You did something. Something happened to you. Could have been a life event. Could have been any number of things. We had a guy, it's been a few years now, that last big flash crash, he built his account size up to 70 grand. Flash crash, ate it up. He sent me an email and he asked me to read it to the radio audience, and please caution everyone to never keep more money in their account than they needed for the purpose of trading the level they were currently at. Something I had been teaching, and he knew that he should move that money, and he was making plans to move the money. He just didn't get it moved in time. So when you have it sent out, put it somewhere that is FDIC insured. You might even gain a little bit of interest now since Janet Yellen has raised 1/4 of a point. I don't know what savings accounts pay these days. That's not the point. The interest is not the issue. Safety. Keeping your money safe. We're done giving our money back to the market. Some of us who've tasted success, we've also been trapped on the roller coaster, not only of emotions, but finances. We make some money and then we give it back. And then we make some money and then we give it back. And then we start to question, wow, is it possible to be consistently profitable in the market? If you will look at this as a business, treat it as a business. The more you treat it like a business, the more it will behave like a business. The same old problems crop up over and over with people. We want consistency from the market, but yet we don't give the market consistent behavior. Every day we try something new, something clever, something different. I think I'm going to give this a spin, and then at the end of the month we look back, we've lost money, and we can't even pinpoint why, because we did something different every single day. I'm going to go to the next question here. All right, Jorge, that's the 90-day mentoring program. At the end of 90 days, we consider you graduated, okay? The indicator set is yours to keep. If you want to stay connected at the hip, if you still want to come to the live trading room, if you still want to come to the Thursday night partners meetings, you still want to have access to the members area with the thousands of hours of live trading and live training videos, you can do that for a monthly maintenance fee of $75, okay? That's the 90-day mentoring program. The concierge trade alerts, I send out 8 alerts every night around 9 p.m. Eastern for the S&P, the Dow, the Russell, crude, gold, soybeans, and I'm in the process of replacing the euro, I think, because they cut it in half. It used to pay $12.50 per tick, and they cut it down to 6 1/4. So I think I'm going to switch that out. That's the concierge trade alerts. The one trade a day, those are a set of alerts just like the concierge trade alerts, but they come out at 11:30 a.m. instead of 9 p.m. at night. When you get the alerts at night, some guys will get the alerts, go get their points, and they're done for the day. Perfect for the kind of guy that has to get up early in the morning and go to work and doesn't have the luxury of trading the New York Open. Okay? So that's the three things that we offer. Now, the mentoring program also includes the weekly trading zones, which was part of the first question. Okay. Savino, what time does the one trade a day come out? It comes out every day at 11:30 a.m. Eastern. How do I get the signals for the one trade a day? Do they come with the concierge trade alerts? No, Steve. What you do is you log in to a website, this website right here, Emini Futures Trading.com. Okay, here's all the different markets: S&P, Dow, Russell, gold, crude, soybeans, euro, bonds. Okay, you can subscribe to as many markets as you want. It's $75 per market. There's a minimum of 2 markets, so it's $150 a month. Concierge trade alerts, you get all 8 markets every day, and that's paid quarterly or annually. Okay, that's the difference in those. So Steve, with the one trade a day, you come to this website, you log in, okay, and so like for the S&P, you click on that, it's going to ask for a username and a password. The passwords change weekly on the different markets, and you'll go username, password, log in, boom, right at 11:30 a.m. Eastern. Usually they'll trigger within the next hour or two. I'll show you a couple examples here in just a second. Okay. Now, your question about concierge trade alerts, those are emailed out. I may go to a format where I publish them the way I do the one trade a days, but I'm a creature of habit and I've got to I don't know. So either way, we'll get the information to you. I like the idea. It's worked out real well having folks come and log in to get the one trade a day, and I thought I would test that for a while, and if things went smoothly, then I would change the concierge trade alerts to the same format. But a couple of people said they really would rather get it by email, and I'm not sure, and so for now, concierge comes as an email, and the one trade a day comes as I post it and you go get it. Okay. All right. Let's get through some more of these questions. Dwayne, whenever I look at your alerts, I mostly see stop outs. Could you go over how to trade these because I'm missing something? Greg, give me an example of an alert that was stopped out, and I'll go take a look at it for you. Because I do the concierge trade alerts, I recap them every day on the radio show. So you can go watch the recap videos from every day. Of late, I've been doing the one trade a day at the end of the radio show. And, well, I'll give you an example right here. Let's look at the market that we're on right now. You get rid of this. Okay. So on Friday, the concierge trade alert was to buy 1904.25 on a stop. Okay. The first move up, these are 30-minute candles, first move up went to 1907. Okay. It continued higher put in a swing high at 1911.50. So that's basically 7 points. So that's definitely not a stop out. Price then comes back and gets below the trigger, and now off we go again. From 1904.25 to the swing high at 1933, the market made 29 points available on Friday for the S&P. Okay? Now, do you understand how that works? Well, I'll be happy to. Well, Greg, you should go look at the radio shows from last week, because we've had some really good weeks. Now, let's look at the. Here, let's do this. I'll go to the S&P 500, CFRN. S&P 500, okay. Okay. All right. Here's the S&P 500. Now, I already showed you the concierge trade alert, which was on Thursday. These went out at midnight. Last 2 days, I was running a little bit late. By 1904.25, stop. Okay. Now, that was the concierge trade alert. The one trade a day was to consider being long above 1916. Okay. 1916 is right here. Okay, so 1904.25, that went out at midnight. It triggered during the 9:30 a.m. half hour. Gave us a nice move from 1904 up to 1911, 7 points. Came back. Important prices, important areas are almost always tested. You'll see that all over the charts. As you go through the radio shows and watch the recap videos, you'll see it again and again. Price always comes back to the important price, important area. So we have 7 points, and then on the second move, we have 29 points. Okay, that's off the concierge trade alert. Now, on the one trade a day, that was released at 11:30 a.m. Eastern. That's right here. Okay. We trigger in this hour, or in this half hour, and we go up to 1950. That's 3.5 points in the S&P. Now, our entire goal, whether you're doing the 90-day mentoring program, whether you're doing the concierge trade alerts, or whether you're doing the one trade a day, or you're doing all of them, is to simply make 2 points a day. 2 points a day in the S&P. It's all you need. People get it in their heads sometimes. I'm not saying you, but some people think that, well, more points is the answer. More points is not the answer. More points is why many people fail to become successful at trading. What we do is we learn to put the probabilities in our favor by using only high probability trade setups. We're able to add contracts with profits we earned in the market. When you do that, you grow a successful, healthy business. When you have to borrow money from the IRA or the 401k or an IDA, you're building something that's very unhealthy, and it's going to take you down the same road that we've all been down before. So on the first break above 1916, it goes the 2 points to 18. It also goes to 1919 and a half, but then you'll notice the swing low on this one is 1916. It came back to touch 1916. Oh, wait. I'm sorry. Yeah, it was by 1904 and a quarter. But on this one, it was to be long above 1916. So we never got back below the trigger. So you can trail your stop a couple different ways. You can, when you initially trigger, you put your stop here, okay? Now, in the live trading room, we move our stop to break even once we have 4 ticks profit. When you're trading the concierge trade alerts or the 1 trade a day, because there's so much more available, most people, and I teach you a method that allows you to trail your stop, okay? Let's take a look at a couple other days. That was Friday, so let's roll back to Thursday, okay? Here's Thursday, January the 28th. The concierge trade alert for Thursday, which came out Wednesday night, said to be long above 1890, short below 1880. Now, if you're going to be long above 1890, that means you're going to buy 1890 and a quarter on a stop, because the only place you can get long above 1890, or the first place you can get long, is 90 and a quarter. So by 1890 and a quarter stop, the first move runs 5 points. Okay, we close here, price gets back below the trigger, and off we go again. Price gets back below the trigger, and off we go again. Back here, we triggered on the short side. The first move down, sell 1879.75, stop. First move was 3 points, get above the trigger. Next move was 3 points plus. Then we triggered twice on the long side. Then we triggered on the short side, 7 plus. And then we triggered on the short side, 5 plus. And then we triggered on the short side, 14 plus. And then we triggered on the short side, 8 plus. Okay. Now there's plenty of opportunity there to grab your points for the day. Let's back up to the previous day, which would be the 27th. And on the 27th, we send out that alert on the 26th. ES long above 1894, short below 1878. So here's 1894, okay? That goes to 1894 and a quarter. That is a stop out. We do have stop outs. All trading methodologies have stop outs. That's another area where people run into trouble. The best trader on planet Earth on a good day will be profitable 7 out of 10 trades. That means he's going to be unprofitable 3 out of 10 trades. But yet, we're very clever, and so we think we should be profitable 8 out of 10, 9 out of 10, or 10 out of 10. Why? Well, because we don't like to be wrong. We're afraid we'll lose money, and we could be embarrassed. So a lot of pressure. This is why we use hard stops, okay? We don't monkey around. This is real money. Stop out. Now, there's a couple of places you would have put your stop. You could have traded it just like the live trading room using an 8-tick hard stop. Or what you could do is when we triggered here, your stop could have been right here, okay? Just below the low of the previous candle before the trigger. You get stopped out, but you don't blow up your business. We never risk in the live trading room more than 8 ticks. Okay, when we move into these bigger time frames, bigger market outlook, we will address the stop loss. You can do it one of two ways. You can drill down to the 4-tick range chart. That's where every candle is 4 ticks tall, and place your trade there where you're still able to maintain the 8-tick stop loss. Or you can use the structure of the market. Now here, when we trigger on this trade right here, we run up to 1910. Okay, so from 1894 to 1910, that's 16 points. Anytime that you're not comfortable with the risk-reward ratio presented by a particular trade setup, you have the ability to pass on that trade. Don't have to take every trade. And once you get your goal for the day, which is $100 per contract per day, you're done. Now, most people have a very difficult time getting up, getting ready for work, making $100 and stopping. I'm on a roll. I'm doing good. I'm a great trader. Watch me fly. Well, how many times do we have to blow up our account before we realize that unless we take a different approach, we're going to continue to get the same results? Okay, so on that Tuesday, it was long above 1894, short below 1878. Okay, 1878 is right here. Let me get these out of the way because we don't need them. Okay, 1878. All right. As we break down through 1878, which is right here, okay? Now, when we say be short below 1878, you got to go 1 tick below, so it's 1877.75, okay? So if you get short here, what's your drawdown? Your drawdown, the swing high is 1880, 1878 to 1880. If you were using a 2-tick hard stop, you got stopped out. If in a situation like this, what I would do when this thing triggers here, because this is so far away, I don't want that much risk. I will put my stop at the high, just a couple ticks above the high of the previous candle. Okay. Then price, in its infinite kindness, comes back. Important prices, important areas, almost always tested. Down we go again. Okay. From 78 to 68, that's a 10-point move. Here, from 78 down to 64.50, 78 to 68 that's 10. 78 minus 64. 78 minus 64, what do we got? 14 points. So there's 14 points there. There's 10 points there. Okay, let's back up another day. And the concierge trade alert for January the 26th, which went out Monday night, the 25th, long above 1875, short below 1862. So the first trigger's on the short side, 1862. Now the first move down takes us to 1861. Okay, that's 4 ticks. Where would we put our hard stop? Well, again, you can trade with the 8 ticks, or you can go just a couple ticks above the high of the candle that triggered you in. And that's enough in this case to keep you in. Now we trigger and we drop to a swing low of 51.75. So basically that's 10 points. Okay. Now on the upside, 1875 is the trigger, and we trade up to 79.75. So that's 4 3/4 points. Important prices, important areas are almost always tested. Price gets back below the trigger, 75. Off it goes again. This time it takes us up to, well, this swing high right here is, well, no, let me not short sell it. Price gets below, puts in a swing high at 80.75. So that's 5 3/4 points. Then it gets back below the trigger and takes us up to a swing high of 1894. So 75 to 94. That's 19 points. Here, 11:30 a.m. Eastern. Okay. 11:30 a.m. Eastern on the 26th. On the 26th, consider being long above 1896. This is what it comes out, 1896. Okay. All right, we trigger in the half hour after the alert is published, and we go to a swing high of 99.50, 3.5 points. We then get back below, the trigger here, and we make a rally up to 99.75, so that's 2 3/4 points. And then we get below, and then here on this one right here, if you trade it again, now remember, our recommendation is once you have your points for the day, you put the mouse away, but this one goes from 96 to 97.25. That's a 5-tick move. Okay, so we've covered all the way back to, okay, what day is this? This is going to be last Sunday night. Long above 1905, short below 1891. Okay, short below 1891. Okay, the first move down is 3 points, 3.5 points, 4.5 points. We get a 9-point move. We get a this is 11:30, and so at 11:30 on the 25th, 11:30 on the 25th, long above 1890. Okay. 1890 is right there. This is where the alert came out, and this is where it triggered. 1890. Triggers here and goes up to 95.5. So from 1890 to 95.5 is 5.5 points. We also triggered that day on the short side as well. On the 25th, short below 1881, right here. Final concierge trade alert of the day dropped 26 points or $1,300 per contract. That's a concierge trade alert. This is the other side of the one trade a day. Okay, this was the long side. This was the short side. The short side was 1881. The alert went out here, was published here. We went long, got our points for the day, but let's say you worked during those hours and so you couldn't trade this one, and so you're left to trade this one. Okay, from 81 in the first 30 minutes we drop all the way down to 73, and we ultimately drop to a low of 65, 75, about 16 points. Okay. It would take us forever to go through every single trade setup from last week, but if anyone had a particularly rough day last week, maybe there's a day you got beat up, busted up, you had a hard go of it, if you'll tell me the day and tell me the market and the time, I'll bring up that chart and I'll show you exactly what we would have done on that day at that price at that time. Okay, I've got the bonds here. Okay, we said to be long on the bonds on Friday above 160.90, or no, I'm sorry, 160.29. We got up to 161.23. If we had gone just a little bit higher, right there's the $1,000 per contract mark. The Russell, we do pretty good most every day. The Russell and crude are two of our better markets. This is when the trade was issued to be long above 1,005. So we get up to 1,007. That's $260 per contract. Remember, the Russell only costs $500 to trade. Back below the trigger, off we go again. Get up to 1,840. Back below, up. This would result in a stop out here, unless you were using a really tight stop. Okay, this went to 1,560. If you're using the rules from the live trading room at 4 ticks profit, your stop goes to break even. You have to decide on these alerts if you want to trade based on the market structure, or when it triggers here, you jump over to your range chart and trade it using our indicators using that rule set. Now, either one is acceptable and either one will do you well over time. The problem is you can't switch it up. You can't try one day and one the next, and you can't flip-flop back and forth. You have to be consistent in what you do. Okay, here is 11:30 on Friday for the Russell. So let's go see what the Russell did. Russell, okay. Okay, long above 1028. So at 11:30, we published, consider being long, above 1028, which is right here. And we put in a swing high at 35.80. So that's 7.5, almost 8 points. That moves $800 per contract. Costs you $500 margin to put the trade on. So did anybody come up with any rough days you want me to take a look at, and I'll show you? Steve, what would you do now? In what market, Steve? And let's see, James, you said on crude on Friday. We had some really nice days in crude last week. There's 50 ticks available on this day right here. By 32.16 stop on crude oil. First we run up 24 ticks. Important prices, important area. Gets tested. Off we go again. Does $1,000, does $2,000 plus per contract. So let's go to Friday. Now, James, you said on Friday you sold below 32.70. 32.70. Well, let's see what we had for alerts on Friday. Friday, crude oil. Let's see if it was Thursday. Thursday, crude oil. I don't show 32.70, James. Oh, on the one trade a day? Okay. All right, let's find that one. Crude oil. Okay, there's crude. Short 32.70. Okay, the alert went out Friday at 11:30, and you never had a chance to sell. Let's see, this is 11. Oh, no, wait. Okay, 11:30. Price opened here. No, I'm sorry. Price opened here. And so at 32.70, oh, you got a raw deal. The swing low was 32.65. Yeah, so that one didn't do you any favors. What was the long side of it? Long above 33.90. Now, did you take the long side of it? That wasn't a big runner, but 33.90 would have been right here. We got, oh, that is 33.90. Okay, so the swing high was 34.18, so that would be 28 ticks. 200, yeah, 28 ticks. $280 per contract. Okay. Now, Steve, you had said, what would you do now? Which market? Which market would you like? Chris, are re-entries after the 30-minute bar closes because there could be multiple triggers within any given 30-minute bar? Oh, there's tons of them. Yeah, that's why I'm showing it to you on a 30-minute. You can drill down to a 4-tick range. You can pull off 10 ticks again and again and again and again. You're absolutely right. In fact, if you go back to the recap videos, not this past Thanksgiving, but go back to the Thanksgiving before on the Google Plus page. It takes a lot of scrolling to get all the way back there. But when you do, you'll see that I used to do the recap every day on a 4-tick range chart, and we would chart and calculate every single move. Some days on crude, as a good example, we would have 20, 30 trades. Thing is you only need one 10-tick move. That's it, and you're done for the day. So you're correct. You could get paid multiple times inside of that 30-tick, inside of that 30-minute candle. Okay? You can, now, here's the thing. With the concierge trade alerts and the one trade a day, you don't need a specific platform. You don't need a specific set of indicators. But the people who do the best are the ones who've gone through the 90-day mentoring program, who have the indicator set and are able to overlay them, because what will happen is you'll often get your goal for the day before you even get to the actual trigger. So at that point, you just trail very tightly right behind it. If you book a personal mentoring session, it's no charge. Also, I don't think I told you about that. If you do decide to partake in the 90-day mentoring program, during that 90 days, you get unlimited personal mentoring. All you have to do is go to the web page, book your appointment. We'll spend an hour together. Now, when we get together, you need to be able to show me what you've been up to, okay? Where you're at with your business plan, where you're at with your trading plan, some snapshots of trades, so that I can really help you. See, if you're struggling getting your plan written, we'll work on that. If you haven't really got the trade setup nailed yet, we'll work on that. Wherever you need help, that's what we'll work on. Now, that's good for 90 days. Again, at the end of the 90 days, if you want to stay on as an active partner, then $75 a month. That keeps you active as long as you want to be active. And as long as you're active, you have access to the one-on-one mentoring. I don't know of anybody else that does that. Keeps me pretty busy because I've got the live trading room in the morning, then we have the radio show, and then I spend all afternoon mentoring, and my family wonders what happened to me, but I'm working. At least I'm not out running the streets, as they used to say, and trying to put a little something away for a rainy day. Okay, what else we got for questions? Hey, Joel, have a good evening, buddy. I'm getting ready to go too. No, we don't code for TradeStation. Michael and I are both certified TradeStation developers, but we don't, it's a security issue, and so we don't code for TradeStation. However, NinjaTrader, DT Pro, any charting platform that a broker, if your broker clears through gain capital, we can get our indicators to run on your chart, okay? There may come a time when we do think or swim. There's been discussions of that. Don't know that we'll ever do TradeStation. So sorry about that. What else do we have? How are the one trade a day and the concierge meant to be used differently? They're not. They're used exactly the same. It's just a matter of the different times of day that they come out. Concierge trade alerts come out before the London Open and before the morning news reports. The one trade a day comes out after the Wall Street Open, after the 10 a.m. economic reports, and the all-important at 11:30 a.m. Eastern. That's when Europe shuts down. And the markets usually react pretty strongly at 11:30 a.m. Eastern. That's why we have such nice, strong moves at 11:30 a.m. Eastern. That's London closing. That's all the traders over there getting their positions closed out for the day. We take advantage of that with the one trade a day. James, for one trade a day alerts, would 15-minute chart be okay for stop placement? Well, James, I wouldn't want to pin it down to a specific time. Probably a 5-minute would be better, because you only need price to move 8 or 10 ticks in your favor. And let's say you have a really huge 15-minute candle right before your trigger. If that just, let's you and I get together for a mentoring session and let me do some one-on-one and let's look at some real examples, okay? Let's do that. Work with it in SEM for a while, and then maybe one day next week or the week after, whenever you're ready, just go to the mentoring page, book a session, and I'll show you. I think 15 minutes you're going to, I'd rather see you go with maybe an 8-tick range than a 15-minute, and I'll show you the reasons why for that, okay? All right, let's see what else we got in here. Gosh, there's so many people and so many questions. I'm trying to cover them all. Does it have to close over the alert price on a certain time frame before being activated? No. When I give you the alert price, in fact, after all these years, I've actually started to change the way I write the concierge trade alerts. In the past, I'll show you right here, okay? And it made perfect sense to me, but I think it was confusing for others. I just started this last week. Okay, see how it says long above 1905, short below 1891? When we did the 3-year public beta test, those who were in that beta with me knew instinctively that I meant to go long 1905 and a quarter, and that I meant to go short 1890.75, because that was the first spot you could be long above or short below. Last week, I decided that even though the old timers understood it, to prevent there being any confusion with new people coming along, because we have so many new people right now, I'm changing the language. By 1904 and a quarter on a stop, or sell 18, having a hard time seeing this chart, 1880.75 on a stop. So there's, never has there been, have we wanted there to be any ambiguity at all, okay? Nothing nebulous. That's why our indicator said in the live trading room, the indicators, whether you're in Brooklyn or Bangladesh, they tell you the exact price to enter the market. long or short. So it doesn't matter where you are. If you're a CFRN partner and you're trading those two primary setups that we trade in, we haven't changed a thing in the live trading room for 3 years. You can download the spreadsheet from the homepage of our website in the upper right-hand corner, live trading room results. Click that, download the spreadsheet, and you'll see every trade that we've taken. Every trade, the good, the bad, the ugly, for the last 3 years. Now that's in the live trading room with people watching. Okay, if it's a trade we take outside of the trading room, it doesn't go into the spreadsheet. You understand why? Okay, no funny business here. We only want to put out the very best work. We always deal off the top of the deck with both hands on top of the table. It's also why we record both video and audio of every live trading room from start to finish. Every trade taken, every word spoken. Because, why? Because it's the right thing to do. There's too many people out there doing it the other way. And so we decided we want to do it the right way. All right. Guys, I've got to get through the rest of these questions. If you ask a question that I haven't answered, and Steve, did you ever tell me what market you wanted to know what to do in right now? These questions just keep popping up. Crude oil, Steve? No, John, we don't use Sierra charts. Sorry about that. But based upon who your broker is, they might have a platform that is compatible with our indicator set. So check with them. Does your broker clear through Gain Capital? Do you know? They don't, or you don't know? Okay. If you don't know, if the no means you don't know, check with them and find out if they do. Otherwise, yeah, we don't have any plans to go to Sierra. It's just not that popular. VJ, normally what time do these trade alerts come? Well, the concierge trade alerts, I try to get them out by 9 p.m. Eastern. Those come out email. The one trade a day alerts, those are published at 11:30 a.m. Eastern every day, Monday through Friday. So one more time, concierge trade alerts, I email them to you. I shoot for 9 p.m. Eastern. The one trade a days, you log into the website I just showed you, eminifuturestrading.com. You log in, you'll be given the password for whatever markets you have subscribed to. Okay. All right, what else do we have? All right, let's go look at crude for Steve. Steve, crude oil. This is crude. Okay. Okay. This thing's dropping good. All right. Consider being short below 33.20. Right here. Yeah, I said I'd give everybody that came free trade, and if this one is profitable before midnight, I'll post another one on the Google Plus trade. Crude. short below 33.20. And just in the event this thing's able to pull it together, yep, that's what I thought. I'm just going to leave it at that for now. I'm not even going to go with the long side. Consider being short below 33.20. Your stop loss should be 33. See the swing high here. 33.52. 33.60. No, we'll make it 33.55 on the stop. 33.55 stop loss. And first target 32.95. So there you go. Okay. If you want to do a smaller stop loss, VJ, you can. You can take this down to a 5-minute chart. Size is relative. There's 5 minutes. You could go right here. Here, I'll even show you this. Oh wait, I don't want to use that chart. What chart can I use? I'll use this one. Okay. $33.20 is right here. Okay. And based upon now using our indicator set, question a valid question would be, where would you have gotten long before now or gotten short before now? We would definitely be getting short because this is a bearish setup for us. Okay. Again, I'm not going to go into all the details. Come to the live trading room in the morning and I'll teach you how it works. But the first, after the bearish cross, I would based on the method that we teach in the mentoring program, you would be short the open of that candle right there, which is 33.47. Your drawdown would have been 33.52. Bearish cross, price pulls away, price pulls back, close below the trend line, sell the open to the next candle, and that's the trade. Okay. Now, this is really pushing the envelope because look at what we've got on our hands. This pushes back to a leg and a retrace, a leg, a retrace. We didn't get a higher high, so we broke the trend here. Now we started drawing legs to the downside. Leg, retrace, leg, retrace, leg, retrace, leg. Asking this thing to give us one more leg at this point, okay? If we take out this low, that should be a capitulation type of move. Otherwise, this thing should turn here and head back up before it breaks 33.20, okay? Now, I'm looking for the bigger move in this trade. So VJ, if you're looking for something smaller than that, 33.20, you could risk back above the high, just above this high, 33.33. Okay. All right, guys. What else is in here? Can you put on a slingshot? Yeah, I can put on a slingshot. Jorge, this is the 4-tick range chart right here, yeah. Okay, you probably typed that in before I changed it. Just pull back to the BBC right here, okay. Now, using our methodology, touch of the BBC, down close, sell the open of the next candle. Which would have put us short at the open of that candle, which was 33.32. Okay. Now we just broke 33.20. Here's the issue, James. When I give out a trade hours ahead of time, I don't know what the dynamic of the market is going to look like at that point in time. If I'm sitting here on top of it, watching it, okay, then I can have a very good idea. Like if you and I were sitting together trading, or if we're in the trading room, I could show you a chart and I could give you the stop. I can give you every Sunday night when I give out a free trade, when I publish it on the free Emini trade page, I always put in a stop and 1 to 3 targets. Okay, this is one I haven't had a chance to even think through. Steve just said, what would you do now? That's what I would do now in crude, because The only setup right now is to the short side. In order to get a long trade on, we need this thing to turn all the way around. We've got to get this CFMA1 on top of the BBC. You know, a lot of work to turn this battleship around, if you will. Okay. So we hit the number, important prices, important areas, almost always tested up to the BBC and down. So we'll see what happens from here. The same thing applies, James, as you saw on the one trade a days. Sometimes they'll trigger in the next half hour, and sometimes they'll trigger 2-3 hours later. I'm not a magician or a fortune teller. I mean, there's plenty of those guys out there that, you know, will read your magic beans. But I don't really get into prophecy and all of that kind of stuff. I read the charts, and we teach our mentoring session, and that's really where everyone who's here tonight should be. You need to learn how to trade. Once you learn how to trade, then these other things like the concierge trade alerts, the one trade a days, those can be really powerful tools once you learn how to trade. Giving you that information without you having the ability to trade, I almost feel like it's reckless on my part to some degree. So I may at some point rethink that. It might become a requirement that you have to go through the 90-day mentoring program and show me that you can trade. But the markets are just flowing so beautifully right now, and everyone's doing so well. I don't want to get in the way of any man's success. I'm hoping that the markets will maintain their volatility up to the point where everybody will be at that point. So come hang out in the live trading room tomorrow, guys. I'm going to take one more look here at questions. What's one trade a day? It's one trade a day. One trade a day. And in order to go there, go to cfrn.net/one-trade-a-day. Okay, guys, I got so much work to get done tonight. John says, at the end of a trade plan, you say ADC buy dollar stop. What does the stop mean? You know, Ben, I know that sounds a little confusing, and I've always thought that. That's just the language of the markets. If I were to say right now, buy, like that trade that we just were, you know, fooling around with here, 33.20. The way they would call that is sell 33.20 stop. It's just the language of the market. It means as price is falling, you set up your bracket so that as price falls through 33.20, it just pulls you right in with it and takes you down. And the same when you buy, if you were buying 33.50 stop, you would put your bracket order on with your DOM, and as price is rising, it would pull you right in with it. Okay? All right, guys, I gave everybody in the email that I sent you, I gave you the link to the live trading room in the morning, and I also gave you the password. So if you want to come and hang out with us and watch us trade, ask questions, more than happy to have you with us. Now, if you're going to take the free trial, you need to install the indicators. Because if you don't, what'll happen is you'll sit through a week and you'll be impressed. You'll go, man, that was awesome. I should have downloaded the indicators. I should have actually, you know, traded along with them. And I should have practiced to see if this is something I can really do. Because when you turn right around and say, can I get a second week's free trial? That makes me go, So do me a favor. If you're going to take the trial, if you're going to come hang out with us, and you're welcome to. That's why I gave you the link. That's why I gave you the password. But please, download the DT Pro platform. Take a free trial. It's so simple for us to turn the indicators on for you in that platform. Ninja Trader, it's very simple too. If you already have Ninja, we simply need your machine ID and we can turn your indicators on for you. And they'll be on for a week so that you can practice daily what you learn, okay? All right. Alexander, you're welcome. Thank you so much. Thank all you guys for your kind words and your kind comments. Don't you have the email that I just sent you, AB? I guess not. Because you're going to need the link as well. Hey, Jack, what's up? You're welcome. All right, guys, listen, it's been fun. It's been real. I think it's even been real fun. But I got to go. Book a mentoring session if you want some one-on-one attention. If whatever you're doing is not working for you and you think there's got to be a better way and you want to try to find a better way, I'll help you look for a better way. Okay? All right. Support at cfrn.net or call us at 949-42-EMINI. 949-42-EMINI. All right, guys. Thanks so much. Have a great evening, and I'll see you all at the bell.